Do you know that sometimes you are taxed on your taxes? The big beautiful bill or the tax plan of Trump, whatever name you're calling it, is going to reduce how much the government taxes you on your taxes. Let me explain. My name is Paul Vasquez with Tax Lab, and you need to become an ethical millionaire. If you don't know what I'm talking about, or you haven't figured it out yet, there's what people are calling the SALT, or the limitation on how much you can reduce your federal taxable income by how much you've already paid in state taxes, right? So let me break that down just a little bit for you. When you pay state taxes, unless it falls within the standard deduction, that amount, if it falls over the standard deduction amount, it basically means that you are being taxed on income you don't get to keep. That's taxed already. So the taxes that you paid to the state are being taxed at the federal level if those taxes go over the standard deduction. If you're in the standard deduction, you don't have to worry about this anyways. But if you have state income or state taxes, right? So we're talking property taxes, we're talking income taxes. They have had a limitation placed on them of up to $10,000 on your itemized deductions or Schedule A. So instead of choosing the standard deduction, you're saying, I'm special, my expenses are greater than the average Americans, and let me show you. So that's where Schedule A or itemized tax return comes in, is you need to then break it down why you deserve a bigger deduction than the standard. One of the areas that is covered by the standard deduction is the state taxes that you pay. So take a look at what you're paying at the state level. It could be sales tax. Usually they'll say one or the other. Either you're claiming sales tax or your income as what you're going to claim as your deduction against your federal taxes. And then you're looking at your real estate taxes, your personal property taxes. So you look at those and you say, is that greater than the standard deduction? If it is, maybe you should be choosing to go for the itemized deduction. Now, there had been in the first Tax Cut and Jobs Act a limitation of $10,000, meaning that if the standard deduction was more than $10,000 and you had property that was taxed at anything $10,000 or more, you could only write off on an itemized tax return up to $10,000. Well, that means the rest of that, guess what? If it was over the standard deduction amount for you, you are basically being taxed on your taxes. So you don't get to keep that money. You have to give that to the state, and then the federal government is taxing you for money that you've already paid to the state, right? So they're raising it now to $40,000, and in 2026 it's going to go up to $40,400. So that's going to be above the standard deduction for young single people. It's definitely going to be under that amount for you guys. And so if you have property, and this affects a lot of people more in states where property taxes are high or property values are high. So if you just happen to live in a state where property values are higher, where property taxes are higher, there's a higher chance that you, regardless of your income level, you may be paying more in property taxes than somebody of a similar age, similar demographic in a different state, just due to property values. So it's gone up to 40,000. It should go up to 40,400 next year. But this also, what they say, sunsets. That means it's in 2029, it's going to drop back down to the $10,000 unless you elect the right candidate, right? It's it's a rule generated to so they have something to fight about to say vote for me because I'm gonna extend the SALT deduction, or don't vote for me, or vote for me because we can't let these wealthy people have tax breaks. So it's a political hockey puck, right? That they're just throwing down there to 2029. So back down to 10,000 at that point. So if you care about this, if you have property taxes that are high, or state taxes, because this includes all state taxes, it's just that property taxes are usually the highest part of that. Now, there is another limit on top of this, meaning that if you have a certain income level, it is limited to 30% of your income. So if you have a very high income, you can't write off more than 30% of your federal taxable income because of the state taxes you've already paid. Right? So you get double taxed anyways. If even if that, so I mean, really, it really kind of affects a lower bracket, maybe a little bit more than the most affluent, right? Well, yeah, because you're still limited to the 40,000, right? You're still limited to 40,000, and next year 40,400. So only for those people whose income, where that represents more than 30% of their income, they wouldn't be able to take as much, right? That's what it's going to come down to. So you look at your income and you say, okay, I can only take that much, but that can only write off up to 30% of my income. So the lesser income you have, the less of that $40,000 you're going to take. For example, if I make, let's say I have $80,000 of taxable income, I can't take that whole $40,000 even if I have it. Why? Because that would be 50% of my income. Now, if I had let's say if I had $120,000 of income, now that represents 30% of my income. So I could take the full amount. So if I made more money, then I'm allowed to take that full amount. But the less money I make, the larger portion of my income those state taxes could be. So it's kind of a niche there about how that could play out in your particular situation. But if you want a tax plan that is for your situation, that's what we do. Go to lab.tax, click on advisory services, and we can help you put a plan in place that takes the biggest advantages of these new tax bills within the law, right? We want to be ethical millionaires. We don't need to be breaking the law or doing anything else, because there's a million and one ways to become a millionaire. Why not choose the ways that are legal and ethical? Because then you have less people after you. You always have the scammers and the bad people after you, no matter what you do. But let's not put the law against you as well. Let's create some barriers against those who would come after you unjustly, right? So you want to have kind of a barrier of showing how you conform with the rules all the time. And that kind of creates a barrier against those who would accuse you otherwise. But you need to have the documentation to back that up. Let's help you make that happen. Lab.tax, click on advisory services. You get a free 15-minute introductory call where we kind of see if our services are right for you. But we want to create that plan to help you become a millionaire, or help you maintain your millions, help you save on taxes legally and ethically. I wish you guys all the success.